Good afternoon, everybody. It's Scott Gillum with the Stock and Options Squawk Box video. And after today's opening flush to the downside on the weekend, we had news that came in and brought both the S&P 500 and the Nasdaq on a massive gap down this morning that is, at this point, trying to recover. Let's take a look at the charts and then we'll go into some commentary. On this S&P 500, when I take a look at where we were on Friday, around that 53.50 level, with the gap down this morning at 51.50, we had about a 9.5% drawdown from the highs that we saw back in July to where we opened and flushed to this morning. On a Fibonacci basis, if I take the April low, which we just went through on our way down, to that April high, we've now done a full 100% retracement, and we're back trying to get ourselves back up to this 23.6 recovery level. The low point that I want to bring to your attention is this blue line, which is the 200 simple moving average on this daily chart. And that would be about a 38.2 move further south into that 5,000 level. Right now, that's off the table on this recovery mode. Let's take a look at the NDX, the tech stocks. A little bit deeper on the dive to the downside. From the July highs, let me adjust this, there we go. From the July highs down to where we opened this morning on this gap down, we went through that 200 simple moving average. Buyers stepped in on probably the sentiment that 200 simple moving average brings about a buying opportunity. But this flush that we've had since the 16th of July, that's a mistake, it should say 16 July to 5 August, is over a 15% retracement, and that means that we're in a bearish trend. Taking a look at the Fibonacci once again, from the April lows, where this trend started to move much higher, to the July highs, and then the pullback, we've seen that we've gone at least 100% retracement. That was where the high so far today is on that gap down. But we've gone through that 23.6 to the downside, and the target, if we want to take a look at it, is about the 38.2 retracement to the downside, around that 17,303 level. Now, why have we had this big move to the downside? So the opening action brought about that large gap down. As I said, nearly a 10% drop in the S&P 500 from their highs. On the NDX, the bearish move into the bearish trend anyway, more than 15% to the downside. Although we gap down, earnings that are still coming in from the S&P 500 and the NDX 100 have been 79% better than expected. This gap lower seems more, in my mind, to be sentiment, i.e. emotion, just to reduce the overvaluations that we've had about the middle part of last month, to a point where the price to earnings ratio expanded above 24, that's a little bit overvalued, has now dropped down below that 23% or 23 number. Yet, taking a look at some expectations for earnings that are going to come through for 2024, we should have an EPS of around $238 per share. That will make this SPX 23-24 price to earnings ratio say that our trading should be back around that 54, 55, 5600 level on the S&P 500. Opportunity could be on the doorstep right now for buying opportunities here on the SPX companies. You need to be specific with your equity that you're buying. The index, possibly, but individual equities offer a better opportunity for a recovery. This is a correction, in my estimation, in an overly emotionally charged valuation market. This pullback has been healthy so far for buyers to once again take a look at setups that they can use for greater valuation as we go into the end of summer through September, into that potential rate drop from the Fed, into and through the election that comes up late October into 1st November, and ultimately into the year-end rally that typically ensues. So once again, review. The gap down today in the S&P 500, looking at individual equities, there are opportunities to take advantage of this emotionally charged drop and now recovery that's going on, both in the SPX and the NDX. So sharpen your pencils, take a look at your equities on your watch list, and find valuations that justify a move back up by NDX by 10% and the SPX back up to about a 5 to 7% move back to the upside in the ensuing couple of weeks. Thank you much. Hi there, this is Scott Gillum from the Stock and Options Room of Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons down below. And if you'd like to trade live with me in real time, click again that link in the description below. Good trading to you all, and I'll see you in the room.